traders, very, very warm welcome to our latest urgent market update video. Now, today is Friday, the 23rd of September. We want to draw your attention to a couple of very significant developments in these financial markets over the last day or so. And as you can see by the title currently up on screen, we're not just looking at the post-reaction, market reaction to the Fed rate decision, but what happened a little bit later. So it's kind of the post-Fed rate decision, because we saw an initial response from these financial markets. Then we saw a little bit of a pause, and it looked like there was a bit of a reset. There was the potential for some buying creeping in yesterday, yesterday being Thursday, of course. And now today we're getting the true market direction filtered through these markets. So we'll have a look at that in a little bit more detail. We also want to raise your awareness of some yen manipulation. Currently, we had the central bank, the BOJ, announced that they are looking to buy the yen. So we're seeing a strong move in the yen pairs as a result. And then this morning, we had the Chancellor of the Exchequer, Kwasi Kwarteng, who obviously their policies had to take a bit of a backseat while the Queen, all last week prior to the Queen's funeral. But now it seems to be that the more of the policies that the UK government are now going to pursue are coming to the fore, with certain mentions towards tax cuts, fiscal spending to try and get through the winter with the energy crisis currently underway, and deregulating the City of London, basically. So we'll go in and have a look at these in a little bit more detail in just a moment. Okay, so if we could start, as we always do, with our risk warning. Just be mindful of our risk warning. Take a brief moment to familiarize yourself with our risk warning currently up on screen. So let's get into these situations in a little bit more detail. So let's start with where we're currently at regarding the FOMC on Wednesday. So if I bring up our Forex calendar and we look at Wednesday, the 21st of September, you'll see that the federal funds rate increased from 2.5 to 3.2. Now that's very much in line with expectations, so nothing major there. We are now seeing quite a panicked central bank, not just in the US, but all across major economies. They're very late to the table on this. They're way behind as far as being. Their whole purpose is for price stability, and they've allowed inflation to get out of whack. And that's why last week, if you saw the CPI numbers, there is a mild improvement in CPI in the US, certainly headline CPI, but it's not as big an improvement as the markets were anticipating. So we saw some initial selling. So then going back to Wednesday's FOMC, and we heard from Jerome Powell as well, really concerned that they're trying to get ahead of this inflation story, and as a result may very well be, let me take this off, may very well are certainly late to being able to address this, but they're looking to do so at this point. So just looking at the price action prior to the FOMC, the news event came out at this point. We saw an initial market response, so that's very much in line with expectations. Then we saw a strong rejection, lots of traders getting taken out with this move, and then we saw the breakout to the downside. So the first couple of hours were really quite choppy with large 100-point ranges, and then we saw the price action kick in, closing at these lower levels. Then the following day we gapped slightly lower, closed the gap, and then moved to the downside, created a low. And this is where on Thursday we started to see this structural failure trade to the upside kick in. Almost exactly this is why we trade support and resistance the way we do. So we were looking at sort of buying opportunities above 78 37.80, and we were looking for selling opportunities around the 38.18 level. With our overall bias, without a shadow of a doubt, being to the downside, you just got to look at price action over the last few weeks to suggest that we're seeing lower high and lower low, one after the other. Momentum is very, very bearish. And for those of you interested in your technical analysis as well, what we're seeing is a descending triangle. You know, we're seeing price pressure pushing these prices down. And on Thursday, we saw this sort of mild response, really, and it was partially bullish, partially quite bearish, but all in all, just more of a pause, where we've actually now seen this move kick in to a very significant level, breaking below Thursday's low, which is very important, below the 37.50, and as you can see, we're continuing to make new lows. So we're very bearish off the back of the Fed. Of course, we've been like this pretty much since November of last year, looking for selling opportunities wherever we can get them across the indices. The next market to look at is what's going on in the yen pairs. So if you look at the pound yen is probably a decent one. We've got some additional pound selling currently as well, certainly today. We're seeing a really strong move, and I just want to draw your attention to yesterday. We actually, you know, the yen was weakening further, and I'll show you exactly the point at which the BOJ, we started to see a new fresh high above the 144.94 level, and we broke above 145.00, very close to 146, and then we started to see some central bank manipulation kick in, and they made statements to the press that they were going to start buying the yen. So we started to see some significant rollover across these markets. It's been held up today. This is the problem that the BOJ are going to have, is because we've got a really strong dollar. So what the BOJ are looking to do is to increase the strength of the yen with a really strong dollar as its backdrop, which is not conducive for further downside. But it is against weak markets, which is really why we're kind of in this trade currently as we speak. So we're getting really strong moves, and these are structural failure trades to the downside as well, breaking below the 160 basically. So we're on a new leg to the downside, and further downside over the short term. So we'll have a look at these opportunities just before we finish. But just to let you know that there is significant market manipulation going on, and it's the BOJ looking to spend an awful lot of money to buy the yen so that the yen can pick up a little bit of strength against other major currencies. So that's their objective. How long will they be able to do this for is another question. Certainly short-term downside pressure as far as the euro yen, pound yen. I would step away from perhaps the pound yen at the moment, sorry, the dollar yen, because they're both strong currencies. But certainly you can look for trading opportunities in the yen against other markets, but just to highlight the manipulation that we're seeing. Now, the last element of this little video is the fact that we are hearing more from the UK government about their policies and approach. And you can see what's happened. Again, if we do our technical analysis, there's your sort of downward price pressure. We've been in a bit of a bear trend for quite some time. There's your breakout this morning. Now we're in all of these markets. For those of you that join our live trade rooms will attest, really strong moves to the downside. And with likely more downside potential expected, really. There's no reason to suggest why not. Just concerns about tax cuts and fiscal spending packages and stuff like that. And a lot of commentators are arguing the fact that one of the reasons why we have inflation at the levels that we're currently seeing, like nearly 10% in the UK, and these are the headline rates. These are not actual the price increases that we're all seeing in our everyday world. These are the headline rates, which you could argue are a little bit perhaps softer than what we're probably currently experiencing. So with these tax cuts, with these fiscal spending packages and things like that, there's an argument, and certain commentators are out there suggesting that these elements are only likely to add to inflation, create a much bigger problem for the BOE which are therefore unlikely to increase rates to a greater extent, pushing the cost of debt higher, so on and so forth. So it's kind of a downward spiral. So so what we're seeing is some really strong devaluation in the pound as a result. Now we've got some sort of more medium and longer term outlooks perhaps for the pound, but certainly short term we would be looking for some downward pressure, perhaps some further devaluation regarding the pound ahead. And the last sort of element to this is the fact that one of the upsides to the Brexit situation was that the UK could set their own policies and regulations, and specifically with regards to finance and big business. And the UK government are now looking to deregulate the City of London and make it, they'll have this competitive advantage more likely so than those that are slightly more regulated. But with that come some extreme risks as well, as we've seen in 2008. So deregulation comes with I suppose a risk warning. If that deregulation can be managed properly, then it's arguably, there'll be a competitive advantage in the UK, at some point. But it's really finding where value is for these markets, which is going to be the key. Okay, so look, that just about concludes this particular video. So just to sort of put all this together and sort of discuss where we're likely to get these opportunities from, in the days and weeks ahead. Well, we're still looking for that US indice to push lower. Loads of commentators are talking about the bottom and buying and all that kind of stuff. We've just been consistently looking to sell these US indices. As a result, with the demand for the dollar still really high, with a US dollar which is appreciating all the time, we're looking to go with that market trend, that market dynamic. It'll take a little while for that to unravel. When it does, obviously we can look for selling trade dollar, but for now we'll certainly stick with that dollar higher trade that's been so successful for us this year. The yen also looking to see some short-term yen strength. There'll come a point where it'll be unsustainable for the BOJ to keep printing and buying as many yen as they possibly can in the face of a strong dollar. So that's why it's more of a short-term view. And similarly regarding the pound, as long as markets are pushing to the downside in terms of the pound, rolling over to the downside, we're looking to stick with that trade unless we have reasons to kind of change our mind on that. So that's really our opportunities ahead. That's what we can look for in our live trade rooms. So we hope this little video has helped to some degree, just explain a little bit more detail, what's happening out there in these markets and how to take advantage of them. For any questions, or if you're interested in learning how to trade the financial markets, feel free to contact us via email. Just email us at support@thelivetraderoom.com, currently up on screen, and we'll get back to you as soon as we possibly can. So on that note, thank you very much for joining us. Do stay tuned for our next video. We do broadcast our trade plan session live at 7:30 a.m. every morning, and we trade these markets live every day. We trade a European session the first couple of hours from 8 a.m. and again at 12:45 for the US trading session, and these are all UK times. So for more information, just go to our website and contact us through the website as well if you have any questions on that. So from everyone here at the Live Trade Room, thanks for joining us for this short video, and stay tuned for our next video. We'll get that out as soon as we see some market developments. Okay, from everyone here, take care. Bye for now.